Hey everybody, welcome back to Markets for Millennials. This is the weekly market wrap for the final week of July here, July 26th through July 30th. And what we're going to do is we're going to take a look at the DXY and the yields for the 10-year yields, I should say. We'll look at all the equity indices, we'll look at gold, silver, and then we'll spend some time on Bitcoin. And so we'll just take a quick look at the DXY. As you can see here, we failed to make a higher swing high from basically the end of March. We got right up to it. A lot of people were watching kind of like a head and shoulders. If I were to kind of sort of draw it out a little bit, it was something like this, maybe a little bit more shallow, coming back to like this swing low. So we had kind of this look, like reverse head and shoulders looking thing that was talked about online. I did add it originally to my chart, but I didn't see it. I think head and shoulders is difficult because it's like, well, where do you line it up? Would you line it up here? Would you line it up like directly horizontal? I just am not a huge fan of looking for that pattern. I feel like everyone's always looking for that pattern. But suffice to say, it bounced off of it, and I put a couple of different things here. I had a kind of a parallel channel as well as a like a kind of a oblong shaped wedge, and we came down over the last week, sold down. We had the FOMC meeting this week and the press conference, and that did a whole lot of nothing. I mean, it was just, honestly, like the market, it's kind of funny. The market has been sideways for months, and it's like people have been expecting, oh, the Fed's going to taper, they're going to taper their purchases, they're going to tighten and raise rates and all that. And honestly, a lot of times, as much as Chairman Powell is coaxing the markets verbally, it's been a whole lot of nothing, honestly. And so, and we have to remember too, the dollar, the DXY is weighted towards 50% towards the euro, but it's a basket of currencies against the U.S. dollar. And so, even though the Fed could tighten or they could loosen, whatever. But really the story is going to be on yields. And obviously, the market has been kind of anticipating inflation. They've been anticipating tightening. They've been anticipating all kinds of things. And as you see here, I talked in a previous video. I had a kind of a shallow, or I'm sorry, a steep increasing trend line. It's really awful. I'm sorry. We broke that. I had you can kind of see a lighter trend line here. We've broken that, and now we finally, going back to our low in August 2020, we've broken that. And as you can see, so we hit it, bounced, broke below, and then retested it, and we're basically resuming down now. So yields are on their way back down. I know I was among people who I thought that this, coming out of this bull flag, that we were going to come up, but that was wrong. And to be honest with you, if I had just, if everybody just took a step back and thought about yields long term, I mean, come on. Who's going to say? I mean, who's to say that yields are going to go up for a prolonged period of time? Anyway, it's patterns are a pattern until they're not anymore. Resistance is resistance until it's not anymore. And so, and obviously, just like in this case, support was support until it wasn't anymore in multiple different ways. So yields are on their way back down now. And so I think a lot of this, we've had, you can see on my chart here, we've had a red day on the equity indexes. I'll talk about those in a second. But in the long term, it seems to me like things are going to be risk off in the long term, because the narrative, the macro backdrop, it's still the same. So with that, let's take a look at the equity markets. To start with the NASDAQ this time. Normally, we kind of start on the S&P. I've got a bunch of different lines. It's kind of crazy here. I've got kind of this channel that I've built back using the touches from October 2020, March 2021, and May 2021. And you can see there's a bit of symmetry across the top. And then you see within that, I've got kind of what looks like this wedge. And this is, a wedge, this formation wedge of a wedge is usually bearish. So, but that doesn't mean that price is going to crash, but it could mean that we kind of come down and test the bottom of this channel, or this support. And you'll notice I don't have a resistance above because I'm a horizontal resistance because I'm not really quite sure where we have it established, maybe here. But then obviously that's support because we're closed above it. So I'm not really sure about that. But even, if we were to, come down and correct, sorry, I got to adjust this really quick. Even if we were to come down off the top and touch this support, that's only 7%. If we come down, if we came straight down to the parallel channel, that's 9%. So that would be a healthy correction. So by no means do I think that, if we broke down, if this is a wedge, okay, so first of all, if this is a wedge and we came and broke down to here, I don't think that that's, bearish long term at all. I think that would be a healthy correction because if you really think about it, other than this kind of drop down, which was only like 1% or maybe 2% or something like that, but it was bought up. I mean, this price movement is consistent with, are we about to get a correction? I think it's possible, but remember, correction 9 or 10%. We haven't had anything 9 or 10%, I don't think, since 2020 September, maybe right here February, but nothing substantial. To me, it's still bullish, and I think with yields dropping, and not seeming, it seems like yields are not going to go up anytime soon. That the NASDAQ is bullish, tech's going to lead the way, and I think it's going to be as long as yields continue down. I mean, like, just take a step back and think about post crash, March 2020 crash. I mean, in this whole range, the story was, yields were coming down basically to nothing, right? And tech was leading the way, right? And so I feel like, if yields are going to start going down again and they're going to go down over time, I can't imagine tech not leading the way. And by the way, this, tech is up, tech was down, on the day. Actually, wait a minute. Yeah, tech was down on the, well, actually my futures are up, excuse me. Well, they're green, but I guess down from yesterday's close. So it's come up. It's kind of weird because I know the coloring is weird. So we are down from yesterday, but we wicked down pretty far and, came back pretty strongly, all things considered. So, and that's with, I mean, the part of the reason I think tech was down so much is because Amazon, if we go down to my NASDAQ here, take a look at Amazon. I mean, Amazon was down 8% because of their earnings, right? So they are back down, even though they had broken out from this, channel that goes all the way back to last July of 2020, right? They've come back down, right? There was a retest and then never made a higher high and then back down in the channel. So, I mean, you have to take what's happening on the NASDAQ and on the equities in general with a grain of salt, because it's not surprising to me if yields are dropping. It's not surprising that money is going out of industrials, out of cyclicals, and back into tech, right? And so the NASDAQ's still a stone's throw away from all-time highs. Speaking of cyclicals in the Dow is at this kind of resistance level, right? Kind of popped above and then came back below it. Again, a stone's throw away from all-time highs. To me, this also is bullish. I mean, and when I say that it doesn't surprise me that the Dow was down, that doesn't mean that I think the Dow is going to, continue down. That's not what I'm saying. I could see us kind of being sideways in a range, especially if we see a correction on the NASDAQ. But I don't anticipate that it'll last very long. Again, so long as yields continue to move to the downside. The S&P, kind of same story. I don't know that we really have an upper resistance established, but it looks like it's, I believe, let's see, 1, 2, 3, 4, 5. So we're actually down on the week. I believe, let me go to a weekly chart. Yeah, down on the week, but still looking bullish. And I mean, if we're looking at, if we think we're going to see a correction, we'd have to like look at this. 9%, puts us down at about just over 4,000, right? That would be pretty significant. Wouldn't surprise me at all to, if we were going to correct, then the correction would be probably to, this level, which that's, it wouldn't be quite 9%. It'd probably be more like 8%. But we have pretty good support there. Um, but I'm not saying that a correction is going to happen. I'm just saying if it were to happen, then, that's where I would look for it to happen, to end at. Pulling back on the S&P long term, I've got this trend line. We've had different trend lines since the lows. This is the trend line that seems to be the most respected right now. And so you can see again, we bounced off of it. So I could see us until this breaks, then we're still bullish in my opinion, and we're not correcting. So that's my view there. The one thing again, and I've talked about this a lot in my videos, look at where the Russell is. Been sideways. We haven't had a new all-time high on the Russell since March 15th, the Ides of March. And I'm not sure when that's going to happen. And so, but to me, again, like if you think about the story after the March 2020 crash, the Russell underperformed, and it wasn't until we got to the election, right, where, because if you look at the shape of this move, kind of the pattern, price was rounding right here, and it wasn't until the election when it kind of took off and then became the leader of the movement, right? So tech by this time, so here we are in August, right? If we were to compare this, tech was already up here at all-time highs by the time we had that correction in August or so. And so the fact that the Russell is not making new all-time highs and it's actually sideways, to me is not surprising, considering it looks like we're moving back towards risk-off heavy tech, and perhaps even a move away from value and back into growth. That's what it looks like. And I don't know, like a lot of people talking, are we back to sort of a temporary deflationary environment, and with the QE and all that stuff? I'm not really sure. I don't really know, but I'm just going off of what price is telling me, and the fact that tech is moving up and the Russell is sideways just shows me that that this could be another period of time similar to April, basically April to, we'll say April to August, where small caps and cyclicals underperformed and growth and tech outperformed. Let's take a look at gold. Post FOMC, we had a huge move up in gold, but what was interesting is we have failed to break this kind of 1830 resistance line, which was support over here, late December and into February. And we've kind of played with that level a few times. To me, this looks like a level that's being respected right now. We bounced off of that and came back down. So gold, again, it's really interesting considering the way that yields have come off. If we go to where yields kind of came to their high, wick high, March 30th, and then have basically come down steadily since then. But then if you go to, right, you have that kind of same spot here, and we came up, but then we've come down. It just doesn't seem right, and I'm not really sure what the deal is here. But gold still has to prove itself. I'm really looking again for gold to definitely get above this swing high. But I think gold is a slow mover. And so I think we could go into September potentially before we make a new all-time high, or not a new all-time high, I'm sorry. Another swing high. We could get there. Not really certain though. Nothing's really certain. Silver also continuing to be sideways, and kind of locked in this little range. I didn't change my support or resistance since last week, just like on gold. So to me, gold and silver are not interesting right now. And I'm not interested in trying to get in on equities. I think on equities, I would wait until we actually see a correction, 9 or 10%. But until then, I'm not going to chase the momentum. And that's that. But the big story here is Bitcoin. And I would like to just take a moment. And I know my chart's a little messy. We're not quite at the end of the trading day on Bitcoin yet. And so I'm not, oh, wow. And even since I started recording, Bitcoin has moved quite a bit. But I want to, before I get into what all of this is, I just want to show you here on Twitter. This was July 19th. I've been watching this for a long time, and I just, the caveat, and you can believe this or not, I think of a lot of things, but I don't always post everything I think. But here I talked about how what I thought was going to happen on Bitcoin. This was, again, July 19th. So if I go back to the chart really quick, July 19th was right here, right? And so July 19th, this was at about 453. This is just before the close of this candle. And price was going really crazy that afternoon. And so that's kind of the little caveat I want to say here. So I said we closed down today between $700 to $1,000 red. Tomorrow we have a small down red day, $100 to $200 red close. Wednesday is green by at least 10%. July 31st, we are up at least 35% from the lows, approximately at 40,500. In this video, and then in this video I posted, which was my last weekly update, which was actually posted on Sunday earlier this week. But I just want to play this for you because I want you to kind of see, what I was talking about here on Bitcoin.
I tweeted that I believed that by July 31st, by the end of the day, July 31st, that we will have come up 30% from the low. And that comes because I looked at, the mid-cycle dip here in the 2017 bull market, as well as the mid-cycle dip low in the 2013 bull market. And in both cases, I basically calculated how much time it would take to move a certain amount of percentage. And so to me, I'm thinking that, I'm looking, I've been wrong in my price predictions before, totally willing to own that. So I'm looking for us to, by the time we get to the end of July, I'm looking for us to be somewhere between 40,000 and 42,000. And if that's the case, then that'll be perfect because we'll be finally at the kind of daily swing high from the beginning of January before this accumulation took place, before this distribution took place. And you can see that played a key role here as resistance. And so if it all plays out like I think it does, then that means that at the end of July, we will hopefully have popped up above this and turned it into support. And we'll consolidate underneath this trend line before breaking out. And I think once we break out, it's only a matter of time, before I think it could be, maybe a month or less before we get to, let's see, so that would be in this range before we make it back to our previous all-time high and go into price discovery from there.
And so, as you can see there, look at what has happened since then, right? So, there were some things about my tweet. We did this first one closing down between 700 and 1,000 red. Yeah, that happened. The red day on, what day was that? The red day on July 20th was actually significantly lower than I thought by quite a bit. And then Wednesday, what was interesting was on Wednesday, our candle was 7.9%, but it went as high as 10.5% up. So while we didn't close 10% up, it did at one point trade 10% above the previous close. And then here we are on July 30th, getting close to the close, and Bitcoin is currently trading. Here we are at 41,475 or so. And so if we close at around this level, or at least above 40,500, then we're a day early on a close at that level. And so we'll see where we're at on Saturday, July 31st. Obviously, the equity markets and all that are not open, but crypto markets are open. And so there we go on Bitcoin. And just again, people talking about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green candles now in a row. People think that that's unsustainable. But then, you go back to previous parts of the bull market, so far, you've got a bunch of green candles in a row. Or if you want to look at it differently, think about, 3-day candles. And shout out to Jordan Lindsay on Twitter, JCL Capital, who talked about points of the bull market where we had like 13 3-day candles or 9 3-day candles. I forget which one it was, but point was we've had a lot of green candles in a row, and it doesn't, that doesn't matter, right? It doesn't matter. And especially for Bitcoin, Bitcoin is going to do what Bitcoin does. And so obviously right now, barring some massive collapse in the next, 40 minutes from the time of this recording, we're going to have our 10th green candle in a row. We're going to be above basically most of the important resistance levels that matter, other than obviously some of the consolidation up here, and obviously other than the most important trend line in crypto. But we will have closed, if we go to our weekly chart, if this will load, we will have closed. We've obviously gotten above all of our weekly closes that go back into January and into February. And since this accumulation started after the big sell-offs, if we go to a monthly chart here, then, we're kind of flirting with this high that's coincidentally right here at about 42,000, the high from January, the monthly like peak wick. And so we're kind of flirting with that. And so I just, again, I want to point out what's going on my daily chart here. If this will hopefully load. Oh, now we're getting to a point where things are not loading. But anyway, as we, come to, here we go. As we come to the close of the daily, I have this crosshair, which is kind of the 42,000 goal. So obviously that's kind of the top end between 40,000 and 42,000. If we get above here, then it looks like we will consolidate perhaps underneath for like a day or 2 or 3 underneath the most important trend line in crypto, and then we're going to take off. So that's the markets. We're not going to look at the sectors today. I hope you guys enjoyed this video. Go ahead and like and subscribe and share if you found this helpful, and I'll see you guys next time.